watching Buy Now, Sell Now on ET Now. I'm Snehi Shah, but with me in the studio, of course, is Kavita as well as Ankita. But let's shift the spotlight to an earnings candidate, Dabur. We've got the management who's joined us. Mr. Ankush Jain, the CFO of the company, is here with us. Mr. Jain, it's been a very good quarter for you. Let's start by talking about the guidance that you've given. The company is guiding for high single to low double-digit growth in FY27. What gives you the confidence of sustaining this given the raw material inflation and the geopolitical pressures that are at play?
Yeah, first of all, good morning to you and your viewers. Before I get into the guidance, a first overview of the quarterly results. Yes, the quarterly results have been good. Posted almost 7.3% growth, 8.2% growth in operating profits, and PAT grew by 15%. And this was backed by a strong 6% volume growth, which has been the highest in the last 18 years. And it was demonstrated by even market share gains. 18 quarters, and it was demonstrated by market share gains across categories where we operate, whether it was hair oil, toothpaste, then honey, digestives, or you name it, and almost 90% of the portfolio, we gained market share. So this also showed strong execution, both at the ground, distribution expansion, market expansion, and market share gains. Now, coming to next year guidance, we are quite optimistic at this point of time that, the recovery in FMCG volume and value has started, which has been witnessed in last couple of quarters. And we see this continuing, whatever visibility we have, even for next year as well. So we have guided for almost a high single-digit to low double-digit growth. And we are targeting that internally as well, despite the headwinds in West Asia. And this will be backed by both volume and value. And why we are optimistic on this is that a lot of efforts have gone in terms of product portfolio, distribution expansion, reach, our capability building, digitization. And those have started yielding results going forward. And we are therefore hopeful and optimistic that this momentum should continue.
Okay, so Mr. Jain, that sounds good. Also talk to us about your pricing activity. We've seen 10% inflation in your commodity basket, and from what we understand from the management commentary, a 4% initial price hike has already been taken. Now, while this is on the initial front, how are you looking at balancing pricing and volume over the next few quarters, and what is your outlook on further price hikes?
Yes, I think we are closely watching this situation. And inflation, you're right, is almost 10% in our basket. And we see this going forward in Q2 as well, both at India level and international. So our philosophy is very clear. We need to, protect our gross margins at a category level. And therefore, we would be taking calibrated price increases coupled with value re-engineering or, cost optimization across the levers of the organization, various combination and protect our margins. So it will be a combination of various levers of the P&L to protect our margins. And whatever upside we get, we will redeploy it back also for demand generation and further distribution expansion. So I think while overall inflation in H1 at least appears to be 10% so there will be a cumulative 6% price increase and further, value re-engineering initiatives should compensate for the balance inflation, thereby giving us a space to protect our margins and redeploy some of it back into demand generation.
Understood. So you are also hinting at the possibility of a second round of price hikes. Mr. Jain, what categories have the highest pricing power within your basket, and where do you see the greatest risk of downtrading or elasticity play out?
Yes, I think, we are market leaders in most of the categories we operate. For example, beverages, health supplements, and then we are also strong number two players in certain other categories like hair oil or toothpaste. So we have strong pricing power. We have seen that, we're quite resilient on pricing, and wherever we have seen pricing growth, we haven't seen that much of volume impact because the brand carries an equity and a legacy towards it. So we are optimistic that the pricing which will be there we may not lead to a significant downside risk on the volume. In aggregate, however, it will only benefit us in terms of overall value growth. And this we will be doing it both in India as well as our international geographies, where we are also seeing a higher level of inflation. So I think it will be quite balanced approach. We have done in the past. Even when the Russia-Ukraine crisis happened, we navigated it. We took price increases. The brands are gaining market share, across, 90-95% of them across last couple of quarters. So we think there is resilience, and we should be able to navigate, this headwinds of inflation.
So that sounds optimistic as well. Good to know that these price hikes are not expected to have a very major impact on your volumes. Mr. Jain, the acquisition of Sains has marked your entry into D2C nutraceuticals. I hope I'm pronouncing that correctly. How strategic is the category over the medium term, and what differentiates your approach in an increasingly crowded market where we see that your peers have already started to they've begun to bet big in the nutraceutical space? How are you going to be positioning yourself in that market?
No, I don't think. We have not done any acquisition in nutraceutical space. That we have launched our own new brand, which is called Sains, and which, as we speak, is doing relatively good. And it's almost 2 crores a month, which means 25 crores annual sales as we speak within 6 months of launch. So we are quite optimistic. That is a nutraceutical brands, combination of them with high, efficacy, and therefore doing good as well. What we announced recently was not a joint venture, but a minority investment in a premium skincare category, which was a RAS product, but that was separate from what you, I think, mentioned. But yes, just to give some context, we have recently launched a Dabur venture, which 500 crore capital allocation, which will be into various D2C space, covering nutraceuticals, premium skincare, premium healthcare, or wherever we find natural synergistic acquisition opportunities.
Okay, so all of this sounds good, and we're hoping to see all of your newer brands and the younger brands in your basket also starting to meaningfully contribute towards your top line. Mr. Jain, thank you so much for taking the time out and speaking with us. Congratulations on a very strong Q4.
Yeah, thank you so much. Thanks.
Thank you. So viewers, that was the management of Dabur breaking down their Q4 numbers and sharing their outlook ahead. But on that note, it's time to slip into a very short break, post which we'll start taking your queries on the show. Buy Now, Sell Now, so stay tuned.